In this video, pattern trading expert Suri Duddella shows us how to trade the ABC pattern. You'll learn some characteristics about pattern trading, get an overview of the ABC pattern, then see a trade example using the E-Mini S&P futures contract. Suri Duddella, author of Trade Chart Patterns Like the Pros, made these points. Because pattern trading is very objective, it provides clear entries, stops, and profit targets. This allows you to determine your risk and profit potential before entering a trade. Patterns display harmonic relationships between price and time swings. This produces symmetric rallies and declines, giving traders an advantage in determining key turning points. This symmetry is visible in all markets and in all time frames. Suri's book examines 65 patterns. Here, he discusses the ABC pattern. In a bullish ABC pattern, price rises from point A to point B, then retraces back to point C. The ABC chart pattern is a prime example of symmetry in the markets. Using Fibonacci factors and based on the ABC point locations, a hierarchy of profit targets can be set. We'll look at specifics in a moment. Symmetry also extends to time. The combined length of time from AB and then BC can be projected forward as the time frame for pattern completion. Price and time projections provide potential target zones to manage trades. Here's an example using the E-Mini S&P 500 futures contract on a daily time frame. The first step in identifying the pattern is to correctly detect the A, B, and C pivot points while they are forming. The A and B points are determined from key swing highs and lows. These can be located from visual examination or can be programmatically computed. The late August swing low in the lower left of the chart is our point A. The mid-September swing high is our point B. The potential point C is looked for within a retracement range of 50% to 89%. The low of 1861 falls within that range and is a potential pivot point C. After the ABC pattern is completed, you should wait for a reversal confirmation signal before entering your trade. You can use any momentum-based indicator or price confirmation mechanism. Here we enter long at the second high bar that appears after point C. A stop is placed at or a few ticks below point C. The difference between your entry point and stop is shown in pink and represents your risk. Fibonacci ratios are applied to the length of the AB swing to project target profit levels from point C. For example, when you add 38% of the length of AB to the price level of point C, you get a target of 1930. Adding 62% of the length of AB gives you a target of 1973. You can review the Fibonacci retracement levels and test the math on your own. The first primary target zone is 62% to 79%. The second primary target zone is 127% to 162%. As mentioned, there is often time symmetry as well as price symmetry. The combined length of time of the AB and AC legs can be projected forward as the time frame for pattern completion. Here is how this pattern played out over the next several weeks. Here are some final words. Patterns are rarely perfect. They form, fail, and form again. Precise ratio levels for reversals or targets in patterns are very rare, and a tolerance ratio of plus or minus 2% should be added for the Fibonacci ratios. Look at the market context and structure. Pattern confluences support resistance areas, and other market context elements must be used to identify and validate the pattern structure. And finally, futures trading involves risk. Click below to subscribe or see more trading videos.